traders from across the globe, and welcome to the 1035th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, good evening. Monday evening. This video is being filmed on Monday evening for Trading Tuesday. That would be the 18th. We're at June 18th already. We're past the middle of the month of the year. Wow, traders, this year is going quickly. Hey, welcome back after Father's Day. Very nice to see everybody again. I took a day and a half off, almost 2 full days. For me, it was like going on vacation for a year. But I'm back and I'm ready to go. Traders, as we know, futures trading is extremely risky and can cause substantial financial loss. The volatility has been insane lately. Always use stops, and you must know that futures trading is not suitable for all trading accounts. All right. For trading on Tuesday, traders, my board is full, and let's talk about it. Right off the bat, a green omni, we applaud for those, right? In the green omni, you got U.S. indices. I think they go higher. On the red omni, we've got bonds and gold, and I think they get hammered, and I am here to tell you why. Traders, this segment will be called, or I should say at this point, is called I Smell a Rat, traders. The bond rally is total BS. I smell a rat. I will show that to you in charts. The gold market confirms the bond bear sentiment. So I smell a rat. The bond rally is total BS, and I kid you not, I'll show that to you. Gold is confirming this BS move. S&P and NASDAQ are poised to break out on the upside once again, confirming this and that. Right? We got the gold confirming the bonds. We have the ES and the NASDAQ. This is all for day trading. Confirming the bonds and the gold. I think that bonds and gold go down. S&P goes up. I smell a rat. This smells to me like a setup, and I will tell you why. The setup is based upon the Fed meeting that we are having on Tuesday and Wednesday, traders. We have had a market that is clearly now bearish, has been given the telegraphed signs by Bernanke. The market has shown us in the technical analysis that the bond market is going bye-bye and it is going to the downside, right? There's a Fed meeting coming up on Tuesday and Wednesday, and we've had the bonds rally all last week into Monday. Are you kidding me? I don't believe that. And I'm going to show you that I smell a rat. It smells like a setup to me, and that's exactly what this is. It is a setup. What should happen by the time the Fed's done speaking Tuesday, Wednesday, or certainly on Wednesday, S&P this way, bonds and gold that way. That's the setup that we are looking at, and I will show you this in just a moment. Traders, come on down to livewithoscar.com. Come into my free trading room and allow me to help teach you how to understand these charts. Maybe you can smell a rat too when you look at the charts. With no further ado, let's go look at some charts. Traders, the bond market. The first chart I want to show you, this is the bond daily bar chart. And consecutive bear flags. Look at this, traders. You go into a bear flag, which I will illustrate for you now. It started right here. Here's your pole. Little bear flag begins this foray to the downside. What starts immediately following another bear flag forms? What happens after the bear flag? Downside. Forms another bear flag. What happens after that bear flag? Downside. And what have we formed right now, leading right up to the Fed meeting? A bear flag. A bear flag is an upwards rally in a rather bearish market. What else has happened? Look at this major resistance line, this red line. It started up here. When you hit it, major drop. Well, you hit it just yesterday, or I should say Friday. Major drop should ensue because now we are finished completing our bear flag, and guess what? Fed meets on Tuesday and Wednesday, just on time for this scenario to play itself out. So the big bear flag leading into the Fed meeting, I find this suspect to say the least. Now traders, in my last video, the one right before this, I promised to show you the setup, and this is that setup. But I'm going to take you now to the June chart because it's got more days back here. It's exactly the same as the September chart in bonds, but this is June. You'll recognize this chart because it was in my last video. I showed you we had a left shoulder, a head, a right shoulder. The whole darn thing is one big topping pattern for bonds. I also showed you that there was a a bear flag in the left shoulder, and it shouldn't work because the left shoulder is the beginning of the formation. But that there was a bear flag in the right shoulder, and I wrote last week and said this one should work. Stay tuned for it. It has worked. Look, it's come all the way down to here. Now we get this little rally right before the Fed meeting. I don't buy it. BS rally traders. This thing goes down. 10-year notes to confirm. Look at your 10-year notes. Left shoulder, head, right shoulder, unequivocal. Plus you've got bear flags all the way down, just like the bond chart. This is, in plain English traders, a bullshit rally in my opinion. This market has gone up just so that the Fed can speak and bond traders have a chance to get short. Right back down we should go after Bernanke does his little dance on Wednesday. And there is gold to confirm the bonds. Traders, I've been showing you this gold chart week after week now for the last few months. And I've showed you the bear flags and how it's broken down and it's filled out our average and it broke down further. And how you can actually call this a head and shoulders right here. And then it rallied up into the average and came off. So you had bear flag. I showed you this last week. Then I showed this bear flag forming. This bear flag will be the death knell this week for the gold market. This bear flag comes out right during the Fed meeting. This bear flag, if you ask me, is the death knell. Gold should take it on the chin. That's what we're looking at. Multiple failures at the average here and again here as it forms a bear flag and another bear flag with the head and shoulders. I don't call that bullish even for a moment, traders. I wouldn't call this bullish with my worst enemy's money. Next, the emini S&P. Traders, long-term view here. This is, of course, a daily, but a long way back here. In the beginning of 2013, we started this trend, or I should say trend channel, not just a trend line, and each time we bounce off of it, it seems to give a major rally each time, right? Well, this time, not only did we bounce off the line here, but we created this bearish channel, or a trend channel on the way down, bounced off of where both lines intersect, started to rally, came down and tested that one spot. Now we're here. More important, we're outside of this parallel channel, and I tell you that that is a breakout. This was the setup for the Fed meeting. Down, 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 down. They couldn't hold it down on Monday. It stuck its ugly head up, but that's the setup for the Fed meeting. Away we should go this week in our emini S&P. Then I wanted to blow it up for you, traders. Very same chart. This one is blown up so that you can see what's going on. You see that secondary parallel channel? Well, maybe it's just a bull flag, right? Look. Why wouldn't this be a bull flag? It looks like a perfect bull flag to me. And now we're breaking out of that bull flag. That, my friends, is bullish when you look at the gold and bond scenario for this week. Then you've got the NASDAQ. Traders, look at that beautiful bull flag breakout in the NASDAQ, plus this wonderful average that has held all along. Look, this is a perfect symmetrical bull flag, and we've gotten right here as of Monday. Traders, then there's this. The Dow Jones Transportation Average, the leader of U.S. indices. These little teeny head and shoulders turn out to be continuation patterns. Continuation patterns. But there is one chart I wanted to show you. Now, traders, you know I'm bullish, and I tell you do not fall in love with the downside, and the glass is half full. But I have been looking at this chart for some time. It is the only counter chart I will show you this evening. We are bullish day traders for Tuesday and Wednesday. This is just in case the market starts to falter. I have noticed this about the transportation average. First of all, it is the leader of U.S. indices. But you've had a head and shoulders, led to another head and shoulders, led to a monster-sized head and shoulders that we're in now. In the head, you had an upright head and shoulders with a bull flag, an F flag, and the bear flag. Then you come down and you make this right shoulder. So, you know, the shoulder is this big blue, or it was red, now blue. Shoulder, big, big head. Big shoulder. So here's the big head and shoulders and a lot of little ones along the way. Then you got the little ones inside of the head and in the shoulder. And this is how you usually notice that a market is topping. Now, I am not saying that we are topping yet. That's not what I'm trying to tell you. But I watch everything, and I don't like this, traders. I got to say, as bullish as I am for day trading Tuesday, I don't like what I see here. I'm keeping my eyes peeled on this for long term. If just in fact we start to come back down under this trend line here, I am going to get a little bit worried about our future. For now, though, that is the only counter chart I will show you. This does not count for tomorrow. This is out to the future. I just needed you to see it. Let's remember, let's stay focused on what's important for trading on Tuesday. That is the bullish scenario, the NASDAQ breaking out, the S&P breaking out, the Russell breaking out, bonds looking bearish, gold looking bearish. That, to me, tells me we get another update, at least, in your NASDAQ. Traders, that's my chart segment for trading on Tuesday and likely into Wednesday. Remember that it smells to me like this was nothing more than a setup before the bond meeting or the Fed meeting, and the bonds have done the opposite, right? Looks to me like the setup will work exactly the way the analysis is showing us. So, traders, you've seen the charts, and there's my technical argument for the both red and green omnis, right? The red and the green. U.S. indices up, bonds and gold down. That should be the scenario leading through Tuesday into Wednesday. Traders, I promised you in my video on Friday that I would do a weekend webinar and explain this I smell a rat. It smells like a chart setup or a trade setup to me. Well, over the weekend, it was Father's Day, and I enjoyed some time by the pool with the children. And, we set up a fish tank, and we played games, and I got to say, I wasn't ready to come back on Sunday night, so I didn't. And you didn't get a video, but I made it on time because nothing has really moved. The S&P went where we thought it would anyway, started to move up. Here's the video. There's my reasoning. Get ready. Do your analysis. Come on down to livewithoscar.com and always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll video number 1035. And traders, I smell a rat in the bond market. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.